Hey everyone, it's Mark Ferguson with Investor More, and we are looking at my 68,000 square foot strip mall that includes a grocery store, restaurant, coffee shop, my office, dance studio. And this video is partially about this, but mostly it's about insurance. And I show this property because it is by far my biggest insurance bill, and we'll talk about how much insurance costs on this property, some of the challenges insuring it, and also we'll talk about the different types of insurance I have and about being self-insured as well, which is a very interesting concept. It's something actually the city of Greeley does because I got hit by a dump truck in my car once and they paid me directly. I'll talk about that story too. And then I know a couple of investors who self-insure as well. And I'll also talk about how much in insurance I pay a year, or about how much. I think it's less than it actually is, to show you the numbers on when you're doing a lot of flips, have a lot of rentals, how much money goes out to insurance. All right, love the likes, love the comments, love the shares. Keep those coming. Love seeing new subscribers as well. If you're new to the channel, I have lots of videos that go over my properties like this. I have a number of commercial properties, residential properties, multifamily properties, crazy properties, not so crazy properties, and businesses as well. So this property, like I said, is 68,000 square feet, which includes the restaurant, the grocery store, my office. The coffee shop is actually on a land lease. So I don't own that building. They own the building. They just rent the land. And so I don't have to insure that. I just insure this big building. And one of the issues I have or had with insuring this building is it's huge. It's 68,000 square feet, but we paid $2.1 million for it when we bought it. It's worth way more than that now. But when I bought it, we kept seeing insurance figures over $20,000. And I thought that was crazy because that's an extremely high number based on the purchase price. And the insurance agents kept saying, it doesn't really matter what you bought it for, it's your replacement cost. And they were insuring it up to like $7-8 million because that would be the replacement cost for just the building, not considering the land, anything else with it. You can see what it looked like before we did some work to it. It looks a little better now. So that was, very interesting, and we could not get them to go down on that. So we were paying much higher insurance because the replacement cost was so much higher. So it's not always just what you pay for it. You can't always dictate how much you want to insure it for. Sometimes the insurance company has to take on, their own rules and regulations for that. So I think when we first bought it, we had it insured for $15,000. And that was after shopping around with many, many, many companies. And with insurance, as usual, every year that went up, right? It's like you find a cheap policy, then it goes up, and then we shop around again. Now we're at $23,000 a year. Maybe it's time to shop around again, but that seems to be the lowest rate we can find. And so then we also have flips that are insured with a different company. My residential rentals are insured with a different company. We have multiple agents we work with because all the different assets seem to be have cheaper policies or better policies with different agents, and it's been kind of tricky figuring all that out, but I'll show you what companies we use and how that all works here too. Now, something about insurance as well in general, a lot of people get warranties, they want to insure everything, they always want to be protected, which makes sense. But insurance companies are there to make money. So in a perfect world, where you've got all the cash in the world, no worries, you would never use insurance because the numbers are always going to be in the insurance company's favor, right? They're always going to charge you, in the long run, more than any claims you have. Maybe one particular person might have more claims than someone else, but it all averages out where the insurance company, they want to make money, right? No harm there. I want to make money too. But usually, right, you're ahead not getting insurance if you're just looking at a strictly financial standpoint and you have lots of money to cover crazy situations that might happen. So that's something to consider, and that's what self-insured means. So I know a couple of investors who do not carry insurance. They have their properties all paid for in cash or they have private loans. They don't carry any insurance. They figure if something bad happens, it would have cost them more in insurance money over the years than to have just saved that money and make the repairs or fix the properties up themselves. Now, you can't always do that, though, if you have a loan. Almost all banks will require you have insurance on the properties. So you can't just, cancel all your insurance policies. The banks get notifications. They check to make sure properties are insured. They'll call you up and be like, hey, why isn't this property insured? Because they want to make sure if the property burns down or there's a tornado, they can get their money back, right? You can either rebuild the property, or if you choose not to rebuild it, you can pay off the loan. They will make sure insurance is paid and taxes too. So I sold a lot of foreclosures, a lot of properties for banks after the last crash. And even if the borrowers would stop making mortgage payments, utility payments, they'd stop paying their taxes, stop paying their insurance, the banks would always make sure they were paying property taxes and they were paying insurance, because they wanted to make sure if something happened, they could take care of any issues with insurance, and the county or state wouldn't come by and snatch the property because nobody's paying property taxes. So the banks will make you have insurance. You can't just cancel it on all of your properties. So is it worth it, though, for me to think about canceling my insurance? I've thought about it before. I don't know if I would ever do it. Obviously, I have some properties paid for, some with private lenders, some with banks. I couldn't cancel the one with banks. Maybe I could cancel the ones with private lenders if they were okay with it. I don't know if they would be. That's something I'd have to talk to them about. So it might not even be an option for most of my properties, but it's something we can look at the numbers on and consider. So here are all of my insurance policies on my investment properties and what I'm paying on them right now. All right, so here is a list of, I think, most of my insurance policies for this year. I had my assistant here pull all these up, and I'm not sure about the dates and how all those work. It just was the cost, and some of them renewed. But this gives you an idea of what I'm paying. I'll show you the total here in just a second. A lot of my single-family homes, smaller homes, $1,100, $900 a month of insurance. You get into the more expensive commercial multifamily properties. Now you're paying $6,000, $6,000, $5,000, $4,000, $5,000, $6,000, $23,000. That's the big one. The property I was just showing you, $13,000. That's my other big commercial property where we had the camper dropped off recently. That one's pretty expensive to insure. And you can see some was 4, 2, 4. So you can see all these rental property ones. Most of those have bank loans on them. Some of them have private money still, but a lot of these I could not remove the insurance on them. The $23,000 one I could not. The $13,000 one I could, because it's a private loan. I don't know if my lender would like that, though. So, of course, I'd want to check with them, tell them first if I did do anything. I don't know if I want to. Very small property. It's in an HOA. It's just a commercial shop. It's extremely cheap to insure because I'm not responsible for the outside of the building, just the inside. There's almost nothing inside of it. That has a bank loan on it, too, although it's very small. So, again, that one I could not remove. So you can see all of these numbers, and then you can see all the different companies I use over here. So, as you can see, State Farm was way cheaper for commercial. And sometimes it's even the agent who's cheaper. It's not even the company. It's just, it really pays to shop around. Allstate was cheaper on some of my residential properties. American Modern, State Farm. I have all kinds of different stuff on here. And sometimes some of these policies were from a few years ago and not really locked in, but they were a lower rate. And to change to the new company, it was more expensive. So it was just a lot of juggling and looking at numbers to figure out what was cheaper and what made the most sense. This one is different because that has a liquor license. So we had to have a little more insurance from a different company that dealt with businesses as well as the property. And the flips were all mostly American Modern too. And some of these American Modern here on these rentals, they could have been vacant when I bought them, was doing a lot of work. And if you have vacant properties, you want to make sure you have the right insurance for them. If you have something catastrophic happen and you have a flip that you're working on, but you said it was a rental property, there's a chance they might not cover it. And then you're really wasting your money paying for insurance that you can't use. So that's something to consider too when you're doing these projects, to make sure you have the right insurance in place to know what your insurance covers. There's all types of things to consider. A lot of these insurance policies, I had to make sure they had sewer riders on them in case the sewer backs up. I had to make sure it covered sewage. Guess how I found that out? Because I had a property where the sewer backed up and I didn't have a sewage rider on it. It didn't cover the sewage backup. Now, very important to make sure you have that. A lot of these policies had benefits I didn't even know I had. I had a property that was trashed by tenants many years ago, and we checked on the insurance and it was a landlord policy. It had coverage for tenant damages, eviction costs, attorney costs in the policy. So some of these policies will actually have extra coverage for those things if you get specific landlord policies. So it's really smart to talk to your agent, see what's covered, see what's in there. And then, of course, looking at the deductibles too. A lot of agents will try and make policies look cheaper because they'll bump up your deductibles. They'll take off all the extra perks. And so if you're comparing one policy to another, you want to make sure they're apples to apples and not completely different, because I've seen agents do that too. So a lot to consider here, but it takes time and effort to search through these. Luckily, I have assistants who can help with that. And my total number, hold on, $133,900 a year. And this is just my investment properties, not my personal house. And it might not be all of them. We're trying to figure out if we got all of them, because I sold some flips earlier, and those might not be included in this. And I actually have fewer flips than I usually have. I usually have more flips going, which means I'd usually spend even more than this on insurance every year. So if all of these were, had private loans or were paid for in cash, I could say, I'm not going to insure anything. I'm going to save $140,000 a year of insurance, and I'm just going to hope I don't have more damage than that in the future. And that's what some investors do. People think some of the things I do is risky and crazy. There you go. There's kind of the ultimate, I can handle it, no problem. Hopefully a tornado doesn't hit my town or a giant flood or something like that and wipe out all of my properties. So, yes, people do this, and it's something you could consider, but can be very risky, and you might not be able to do it with certain lenders. I also mentioned the city of Greeley is not insured, at least last time I checked or had an incident with him. This is back when I was driving my Infiniti a long time ago, more than 10 years ago. And the road kind of turned, like it was a 2-lane road, and the lanes turned like that. And I was in a lane in front of a dump truck. And so I turned with the lane. So I think the lanes turned like that. I turned with the lane. He went straight, hit my back end. Didn't hurt anybody. It was just a real low-speed accident. He was at fault. And the city said, we don't have insurance. We self-insure. We don't have insurance. Give us an estimate on how much it costs to fix it. I got a bid. They wrote me a check for how much it was. Pretty crazy, and actually pretty easy, except the dump truck driver tried to say it was my fault at first, even though he hit my back end and he was behind me when it happened. So there are cities and states who self-insure as well, with that same idea that it's actually more expensive to carry insurance than to pay for any claims, any damages that actually occur. And like I said, insurance companies make money. That's the goal of being in business. So over the long run, if you average things out, you would be better off from a pure money standpoint if the averages play out to not have insurance. But the averages don't always play out. It's very risky, and you might not be able to do that in real life. So there you go. There's some information on insurance, how we do things. There's different types of insurance for different types of investments. Owner-occupied insurance is different than rental property insurance, which is different than flip insurance, which is different than commercial insurance, which is different than business insurance. Make sure you have the right insurance. For some of these Foremost, American Modern, those aren't actually like insurance agencies. That's just a type of policy, and you can still get that policy through State Farm, Allstate, Farmers, some of your other insurance companies as well. And like I said, we're always shopping around. We're always checking prices because those go up and down constantly and fluctuate. I think we changed insurance 2 years ago and went to State Farm on my commercial properties. Saved me like $25,000 a year by switching over to them because they were so much cheaper. So if you have a lot of properties, a lot of investments, it definitely pays to pay attention to your insurance, make sure you have the right policies, and shop around whenever you can, probably every year or two, really, if you want to get the most bang for your buck. All right, thanks for watching. Love to hear your stories or different things that happened with your insurance. I have had payouts for, a roof that collapsed a long time ago when I flipped houses with my dad. We had a meth house that burned down. Insurance paid for that. We've had some other floods, sewage problems, lots of roofs replaced because of insurance. And one thing too I should comment on, which is very important, should have said this earlier, if you have too many claims, if you have claim after claim after claim after claim, your insurance companies can drop you or raise your rates, or it can make it very hard to insure properties in the future. So if there's small stuff, minor stuff, we won't file a claim on it. We won't file a claim. We don't want too many claims against us because that could hurt us in the future getting insurance. Now, something else to consider too is like if we have a massive hailstorm, they call it like a catastrophic, I forgot what they call it, a mass damage situation, some kind of crazy name they have for it, where if a lot of properties in the same area are damaged by the same storm, they call it something, and it won't impact your insurance as far as claims go, because everybody has the same problem, the same issue. The insurance companies call it something, and then you can get your roof fixed. That won't count as a claim against you for future insurance for the properties you have. So we did have a huge hailstorm a few years ago. I think I had 8 or 9 roofs replaced, my personal house replaced, and that was an $80,000 or $90,000 in insurance claims we had, and none of those counted against those properties for the future. But if it had been an individual, claim because the sewer backed up, that would count against the property. If you have too many of those, then they can decide, hey, we're not going to insure you anymore. So again, your insurance agent should be able to explain this much better than I can, give you some different options, show you different things that happen. But again, it's also smart to shop around. Make sure you're shopping apples to apples and are getting the best coverage and policies for your properties. All right, thanks for watching. Like I said, love the comments. Love to hear your stories about insurance, any tips or tricks you have, or if there are any insurance agents out there who want to chime in and tell me what I said that was wrong. Happy to have your comments as well. All right, love the likes, love the shares, and we'll be back with more videos on my properties and different advice videos coming up here soon.